Let's get across the market open now with Jessica Amir, who is joining us from Mumu. Jessica, I like it. You've coined a new term, the Bessent blessing.
Yeah, it's pretty exciting. Markets are, I guess, rejoicing that we do have Bessent, I guess, taking to a key position in the White House. That is, of course, after the inauguration. So we saw the Dow Jones, the blue chip index, up 0.9%. But Nadine, the small cap index, the Russell 2000, that was really the showstopper. The day prior, it rose 2%, and overnight it rose 1.7%. But it did what we call gapping higher. That's a technical term that basically says that newfound buyers are rushing in off the streets to do everything they can to get their hands on small companies, believing they're bound for higher levels because Bessent is set to cut taxes, boost GDP, and also cut oil production by 3%. Or boost oil production by 3% rather. But all in all, the broader S&P 500, that's also risen as well. So it suggests the broadening of the rally is once again improving.
It is incredible, isn't it? So the gains for the S&P 500 this year, 25%. Okay, so yes, Bessent, the news came out late Friday, so first full day for markets to react to that. But it can't just be that, why these stocks continue to charge higher. What other dynamics do you see as contributing to this momentum?
Yeah, so several key reasons. So firstly, absolutely, stocks are bound for higher levels. We do have to remember that we've got some of the key risk markers that we've been watching and speaking about, suggesting that why markets could pull back. And now this concoction is actually calming down, this Molotov cocktail, so to speak. So you've got oil prices coming down, not only on the back of Bessent saying that he wants big oil producers to pump up 3 million barrels extra of oil. But you also have Israel, Hezbollah ceasefire talks picking up. But also, Nadine, you've got the US dollar seeing its biggest fall in 2 weeks. That's pretty good for commodities. And of course, it's great for commodity stocks down under as well. But of course, cutting of red tape would be a huge endorsement, would also support the narrative for higher earnings growth and earnings expansion ahead. And this is already at a time when economic growth is growing stronger than expected. So that's why we're seeing investors really rotate out of those safe haven plays and into everything and anything that's kind of pegged to stronger economic growth. So that's why banks continue to hit new all-time highs day after day. Industrials, they're really ruling a roost here, outperforming overnight. But again, I do think that we do have higher levels ahead. We're probably seeing some profit taking in some other type of industrials / commodities vis-a-vis uranium companies. But all in all, for the most part, we are expecting, I guess, a good run in for 2025 end and perhaps another showstopper for 2025.
Yeah, right. Okay, so higher highs coming your way to end 2024. Today, though, Jess, are we set up to again test those record highs here locally?
Yeah, so the setup for the Aussie share market is increasingly bullish, and we've been speaking about this for some time. And I guess we've got to remember that we are seeing one of our best returns ever for November. And I guess the thinking is this continue, not only because stocks traditionally do well in this shortened week in the US, and we follow suit because of the flush with the economy's flush with cash because of Black Friday sales. But also, we're starting to see the narrative really broaden out for commodities and industrials. And that's really for the benefit of our Aussie share market. So far this month, Nadine, we do know that we've been speaking about tech stocks really pushing up the market to new all-time highs. But now we're probably starting to see those commodity players that were some of the worst performers this month really start to turn the corner and break out higher. So think about gold. Sure, gold is lower today, but it's probably going to break out higher. Aluminium, copper, nickel players, all the broad commodity players, including iron ore, are set for higher levels ahead. Different commodities, different strokes for different folks. We are seeing broadly most commodity prices are lower overnight, but it is important to remember that we have seen a breakout in iron ore, and that does support the Aussie share market as well.
Yeah, okay, but you did sort of allude to it earlier. You think that uranium could come under a bit of pressure today?
Yeah, so with the world's biggest uranium ETF, URA, that's the ticker that it trades by on the New York Stock Exchange. So it started to pare back, and we've seen some uranium stocks in the US. Think about Vistra, think about Constellation Energy. They've actually outperformed and done better than Nvidia. But we're starting to see some profits taken off the table for these players, and that is kind of like putting, a price ceiling on uranium companies here. It doesn't mean that the narrative and the long-term bullish scenario has changed at all. We do know that, think about Amazon and Google, they're really ramping up spending and buying uranium directly from some of these companies that we've mentioned, Constellation Energy, Vistra. But because we're now seeing the pullback in the US, we've seen that consolidation start to really pick up pace over the last 2 trading sessions, including overnight. That does mean stocks like Paladin, Boss Energy, Deep Yellow, those other small cap uranium plays will probably come under some pressure. But I do think that you're probably going to see some dip buying, Nadine, kick in, given that we've got Russia taking supply out of the market and demand is really on a one-way highway going up.
Okay, and just a quick thought on Bitcoin. Look, it's no big surprise, taking a bit of a breather as it marches toward that $100,000 psychological level, which is huge. I mean, it's going to have to clear it at some point in the next couple of weeks, you would think, to keep the momentum going.
Yeah, absolutely. It's only normal, as you said, for a bit of consolidation right before that key $100,000 level is hit. And that's, of course, when all the options kick in. So there's lots of profit taking and caution really picking up here. But can Bitcoin rise above $100,000 before the end of the year? Possibly. Can it go higher? Can it go to 175? Possibly. So that's the next key level that we are watching. Once we do see a breakout above $100,000, options are then suggesting that 175 will be potentially the next key level to watch. But then, of course, you've got to remember the bullish scenarios. Robert Kiyosaki said that he's still thinking a 300K is still possible. And then, of course, we had Blockstream CEO Adam Black saying, if we do see after the inauguration, if we see Trump come out and make Bitcoin at that US strategic reserve asset, sitting alongside gold, meaning the US government will be buying Bitcoin just like they do gold. And he said you might expect a very quick jump from 100K to 1 million. Seems extraordinary. Is it obscene? Probably. But regardless of it, Bitcoin rising to higher levels, you probably want to keep your eye on Square. That is increasingly going to the top of Australia's market cap leaderboard. And I think next year it probably could be a top 5 company, Nadine.